There's been a massive media buzz about 12 growth stocks that recently raised their dividends, and the main hype was about not having to choose between growth potential and dividend payments when it comes to picking the best stocks to invest in. In this video, I'm going to take a look at all of these 12 stocks that have recently boosted their dividend payments, and will share my opinion on which ones I'll be staying away from and which ones I'll be buying, at what price, and why. Hey Kiana, so the markets are at an all-time high right now. Is it really a good time to buy? Great question. While when investing long-term, we don't have to worry that much about what price we get in the market, some of the top stocks I'm about to share with you are a tad overvalued right now. But there's a good chance we'll see a pullback throughout 2021, and some of them have already paid their dividends for this quarter. So we have the luxury to wait for a pullback to buy. If you're in a hurry, you can view the list of these 12 stocks in the description area of this video, but if you want to hear my analysis on each of them, my top 4 picks from my portfolio, and the best optimal price you can buy them at, make sure you stay until the very end of this video and smash the like button to help me with the YouTube algorithm. Does that sound good? Cool! Let's dance our way to the intro! Divas and Divos, I'm Kiana Danielle, a 4-time and a newly best-selling author and the founder of the Invest Diva movement, the march to jump on to take control of your financial future and to make your money work for you. My mission is to help 1 million moms start investing on their own by the end of the year 2025. So if you are a mom and or if you know of other moms who could benefit from taking control of their financial future, you know what to do. Please spread the word and help us make this huge impact. The best place to start is my free training. The link is down in the description area on YouTube or in my bio on Instagram. So without taking too much of your time, let me first share with you the list of the 12 stocks that have recently announced a higher dividend payment according to IBD and S&P Global Market Intelligence. These stocks are spread across different industries, from healthcare to tech, like Microsoft, to consumer, discretionary, and industrial sectors. Microsoft was the first one to announce a dividend hike back in September 15th, and most recently, D.R. Horton and Kansas City Southern announced their respective dividend hikes on November 10th. Now, of course, I wouldn't want to add all of these stocks to my portfolio, especially if I already have a very well-diversified portfolio that gives me a good exposure to all sectors, and especially if I have already invested heavily in very high dividend-paying stocks that I shared with you in my previous YouTube video. The stocks I shared in that video pay a much higher dividend yield, but growth potential isn't as high as some of the ones in this video. So if you haven't watched that, please make sure you take a look at that as well. And then you can create an investment strategy depending on your risk tolerance and your financial goals. Remember, what could work for me may not work for you because we are likely at different stages of our investment journey. Our risk tolerance is different, our cash flow and financial needs are different. So you might even find some of the stocks that I'm staying away from today suitable for you. Say if you have a higher risk tolerance or a shorter trading time frame. If you have any doubt on how to create an investment strategy and a portfolio that is just right for you, make sure that you attend my free masterclass by clicking the link in the description area of this video. And just by attending the free masterclass today, you'll also be getting my risk management toolkit for free so you can get started on the right foot right away. Now let's get to my top picks that I'll be adding to my portfolio and the optimal prices that I want to buy them at. I actually already have Microsoft and Estée Lauder in my portfolio, so I'm also going to reveal if I'll be adding any more shares of these stocks into my portfolio based on my market analysis. First step is using my signature Invest Diva Diamond Analysis, or the IDDA, to get a holistic view of each of these assets. This means analyzing each asset from a fundamental, market sentiment, and technical price action points of view, and then determining whether the asset suits my unique risk tolerance and financial goals by plugging it into my InvestDiva system. To save time here, I've already conducted the IDDA and created this spreadsheet to show you the fundamental valuation, market sentiment, and price valuation of each of these assets, and I've sorted them based on Ex-Dividend Date, which is the date by which you must have bought the stock in order to receive this quarter's dividend payments. We're filming this video on November 16th, 2020, so any ex-dividend payment before this date means we won't be getting the dividends this quarter, and we must wait for the next one. Now, on the bright side, if the stock is currently overvalued, that means we have time for it to drop lower and buy at an optimal price within the next 3 months. Take Lennar, for example. Its ex-dividend payment was back on October 15th, and it's actually one of the highly valuated stocks on our list, both from a fundamental and market sentiment points. Its stock price is currently fairly valued, but we're expecting a pullback based on price action analysis. So if this stock is something that fits well within your portfolio, what you can do is to set buy limit orders at lower prices and wait for them to go through before the next dividend payment is due, so you can take advantage of both capital gains and dividend payments throughout 2021. Now let's start with the assets that I won't be adding to my portfolio simply based on fundamentals and sector. Cummins is a leading manufacturer of diesel engines, and this industry does not excite me at all. I don't think diesel is going to be even relevant in the next decade. So for that reason, for my long-term portfolio, I won't be investing in anything in this sector. The next one I won't be adding to my portfolio is Texas Instruments. This one is actually a semi-cool company, and they produce semiconductors for well-known calculators, but my portfolio is already very tech-heavy, and TXN isn't one of the most exciting tech stocks to me, so I'm gonna pass. Cintas is another one I'm going to pass on because even though their dividend safety grade is pretty high and they increased it by 10%, its dividend yield is still pretty low. And not only that, since Cintas' core uniform services business is correlated with the U.S. employment trends, its operating performance is highly cyclical in nature. So this kind of defeats the purpose of dividend investing. If you're investing in dividend stocks, you want to hold on to it long term and collect high dividends, or at least see a considerable capital gain. Cintas may not give us either. Next is West Pharmaceutical, which raised its dividends by 6.25% to 17 cents on October 28th. This one is interesting because it's one of the large players in the healthcare packaging space and plays a crucial role in helping its customers bringing new drugs and treatments to the end markets. With the coronavirus vaccine aiming to start distribution early 2021, this stock is the one to keep an eye on and to see whether or not they will have any role in the distribution. Its stock price is currently way overvalued, but it could be an interesting buy if it pulls back towards 262 and 236, which are key psychological levels based on Fibonacci price action analysis. But for me, there is a better stock in the same category that may be a better pick. We'll get into that in just a little bit. Again, if you're having any difficulty understanding how my analysis process works, please make sure to attend my free masterclass by going to learn.investdiva.com/yes. Another stock from this list that I'm gonna cross out is Newmont Corp. While this is the world's largest gold producer, Newmont is actually exposed to a lot of unnecessary risks when it comes to its mining and management. So I'd rather invest in gold-backed exchange-traded funds to get exposure to gold. I'm also gonna cross out Kansas City Southern, KSU, because this isn't a sector I'm interested in exposing myself to. We are now left with Lennar, AmerisourceBergen, Microsoft, Whirlpool, Estée Lauder, and D.R. Horton. As I said at the beginning of this video, I'm already invested in Estée Lauder and Microsoft. I'm not going to add any more EL because it's way overvalued right now, but I will be adding more Microsoft at optimal prices because it has very wide economic moat. It's involved with all the right sectors that could see more growth in the coming years, including Microsoft Azure Cloud, AI, and growing partnerships with the largest corporations in the US and around the world. In fact, I shared my long-term investment strategy for Microsoft a while ago, so make sure that you check it out on our YouTube channel. Looking at Microsoft chart today, you'd see that its price is consolidating after reaching the all-time high level of 232 back in September 2nd. The future Ichimoku cloud is flat, leaning bearish, and we have a strong support forming above 200. With that, my buy limit order ideas include 211, 200, and 187. Keep in mind that its ex-dividend date is on November 18th, so if you don't have any Microsoft and are investing for dividend payments, you might want to bring your BLs a little bit higher or even buy at market price if you really want the dividends this quarter. When it comes to the healthcare sector, I'm interested in adding AmerisourceBergen, ABC, which is the leading global third-party logistics provider. AmerisourceBergen handles a third of the pharmaceutical distribution market, which gives it an edge. And its infrastructure provides scale and the ability to effectively negotiate pricing and provide commercialization, inventory, and compliance support. In terms of price valuation, the company is actually still below its 2015 all-time high levels, but has recently broken above its 2018 high, which gives us a long-term bullish outlook. It also has a higher dividend yield compared to its peers, but we have time until February 2021 to cash the next dividend payment. For that reason, I will set my buy limit orders at 105, 98, and 92 respectively. When it comes to consumer discretionary sector on the list, I'm interested in Whirlpool because I'd get a much higher cash per share for the amount I'd be investing in. However, keep in mind that Whirlpool has a history of being super volatile, so it's important to set buy limit orders instead of buying at current market price. On the other hand, its ex-dividend date is November 19th, so if you want to cash this quarter's dividend, you'd better act fast. So for that reason, I've set my BLs at around current market price at 181, 171, 159, and 140 that we could cash for the next quarter dividend payment. I'll be monitoring this before November 19th too and make necessary adjustments to my BLs as needed. Last but not least, we have D.R. Horton, DHI, which is the same category and valuation as Lennar that I talked about earlier. They are actually almost identical when it comes to fundamental, market sentiment, and even technical analysis valuations. If you're interested in expanding your portfolio to home building sector, in my opinion, you can't go wrong either way. The only immediate advantage that DHI has is that its ex-dividend date is not until December 3rd. So if you buy anytime before that, you'd get paid this quarter's dividend payment. Whereas for Lennar, you'd have to wait until 2021. My BL ideas for DHI include 61, 62, and 53. There you have it, my top picks within the stocks that recently raised their dividend payments, as well as the optimal prices you can set your buy limit orders at. If you haven't already, make sure to secure your spot for my free training today. To get my risk management toolkit too, smash the like button to help this video with the YouTube algorithm. Subscribe so you never miss out on my latest updates. And remember, make your money work for you.